Hi, good morning all. Today we are going to start purchasing model. Yesterday we discussed basics about purchasing model. Today we will see what is the PTP cycle, complete standard PTP cycle, means procure to pay. See, generally, uh, just take one general scenario. Suppose if we want to buy a laptop, so what we will do? First, we will decide which company laptop we are going to buy and what is the configuration. So once we decide which laptop we are going to buy, next what we will do, we will visit different suppliers, means different shops, and we will go and we will get the quotation, means price. So for example, here we are having, we went shop 1, means supplier. Okay, supplier 2, supplier 3. So once we got the price from each supplier, what we will do, we will choose one best price and we will buy the laptop. So what we will choose one best price, and even not only price, we will consider when he is going to deliver and how many days, how many years will provide a warranty, and is there any free service. All those things we will consider. We will choose one best supplier and we will buy the laptop. So this is generally we will do in our daily life. But if you consider organization point of view, how they will procure. If you take any organization, we are having different departments in every organization. For example, let me point out here all the departments. One second. So here I'm having sales department, sales department, okay, sales department, one second. Okay, sales department, who is responsible for all the sales related activities of this organization, and inventory department, who will maintain all the inventory items, materials, all the material transactions, whatever required. Mainly inventory department maintain the items, means material. And purchasing department, who will take care of whatever, if company require, means if any organization require any items, purchasing department will raise a purchase requisitions, means purchase orders, and they will buy the material. And payables department, and for example cash departments. Okay, see, suppose for example, see, sorry, for example, we got one order, sales department got one order from customer. So he required some items, some few quantity of items. What they will do, once they will get the order, they will check with inventory people whether stock is available or not. If stock is not available, so what they will do, they will contact purchasing department and they will buy the material. And once we got the material in our inventory, then we will ship the material to the customer. So for example, take one general scenario. we got one order, but we are not having sufficient on hand quantity, means we are not having sufficient quantity in inventory department, mean inventory. So what we have to do, we have to procure the material and we have to deliver that item to the customer. Okay, now we will see here procure to pay, how it will follow. See, this procure to pay process will start from requisition. Okay, what exactly requisition? Mainly this requisition contains what are the items we are going to procure, and what is the and how much quantity we need, and what is the need by date. I mean, when we require those details, all those things we will maintain in requisition. So what they would do exactly? See here in our case, we got one order, but we are not having sub. The sales department contacted inventory department, but they found that they are not having sufficient quantity. So who is maintaining material, that corresponding person, he will raise the requisition. So in requisition, what it contains, requisition what it will available, it will contains what are the items we are going to purchase, and how much quantity, and what is the need by date, means when we require, or when we require these items. Let me represent in pictorial way. Okay, so here requisition. So whenever we found the shortage of material, who is responsible to maintain on-hand quantity, means who is maintaining the material, that person, he will raise the requisition. Requisition will contain what are the items we require and how much quantity when we need that one. See, suppose at this point of time we don't know the supplier from whom we are going to buy. So what we will do, first we will choose different customers, and we will ask quotations for those items. Means we will ask quotation. So that is called RFQ. RFQ means request for quotation. RFQ request for quotation. So who is responsible for this one? Okay, request for quotation. See, once inventory peoples will raise the requisition, immediately he will pass the information to purchase department. Purchasing peoples, they are the main persons to purchase the material. They will review the requisition. Again, here we are having few more points. Once we raise the requisition, it has to get approval. Means it will go to our manager based on our whatever approval hierarchy we defined in our organization. Based on that, it will go different approval levels. And once we got the approval, then only purchasing department will take that one. So that one we will see how approvals will go. Let's assume requisition got approved. Okay, in our scenario, requisition got approved. So immediately purchasing department, means buyers who are having access. So what they will do, they will create request for quotation based on requisition. Again, request for a quotation will contain same what are the items we required, and how much price we are expect. I mean, how much quantity we required, and when we are expecting that material to deliver. So they will prepare RFQs, and they will send this RFQ to different customers. I'm sorry, different vendors. Vendors means suppliers. So this RFQ will go to the suppliers. See, for example, here I sent this supplier 1, supplier 2, supplier 3. Suppose, yeah, vendor 1, vendor 2, vendor 3. So what we will do? Okay. So by using requisition, purchasing department will create RFQ document, means request for quotation, means we are requesting the quotation from supplier. This RFQ document we will send to the different vendors. Vendor 1, vendor 2, vendor 3. So once we send the RFQs to the different vendors, what we will get from based on our RFQ, they will send the quotations to us. So we received quotations. Means quotations, what it contains? Quotation will contains how much price they are offering and what are the terms and conditions when they are going to delivery. See, for example, in our case, we are buying one new laptop, so Dell laptop. So they quoted, for example, $20,000, and they will deliver within 3 days, but they will give warranty as 1 year. If we take same thing, same configuration of item, we got quotation from second vendor. He will give at $50,000, but he will give warranty as 3 years, and he will deliver immediately. And if you take third supplier, he will give on less price. For example, maybe $15,000, and he is not providing any warranty, and he will take 10 days time. So basically, quotation what it will contains is what is the price they are offering and when they are going to delivery and terms and conditions. All those things available in quotations. So this is quotation 1, quotation 2, quotation 3. So each quotation we got from different suppliers, mean vendors. Okay. See, this one I got from quotation 1 from vendor 2, quotation 2 from vendor 3, quotation 4. Okay. Okay, fine. So now we got all the quotations from each and every supplier. So next, what this purchasing department people will do is they will do quote analysis. Quote analysis means they will review all these quotes and they will finalize one best quotation. So quote analysis. Quote analysis. So what is the quote analysis? Based on by using these quotations, purchasing department they will do quote analysis, means they will review all these quotations and they will finalize one best quotation. See, for example, in our case, let's assume quote 2 is finalized. So based on this one quote analysis, what we will do? We will prepare the purchase order. That means in quote analysis, we finalize the supplier. That means we are going to buy material from vendor 2. We finalize the supplier. So once quote analysis done, purchasing department they will prepare the purchase order. So next step is create purchase order. Purchase orders. So what exactly purchase order will contains? Here, if we take requisition, what it contains? It will contain what are the items we are going to buy and what is the quantity and when we require it. But we don't know the supplier. When we will know the supplier? Once we do the quote analysis, then only we came to know from which supplier we are going to buy this material. So if we take purchase order, here also almost same information, whatever information available in requisition, same information is available, but little bit some extra information like what are the items we are going to buy and what is the how much quantity and who is the supplier, and when we require this material, all those information we will maintain here. So again, purchaser also requires approvals based on our organization approval hierarchy. Means whatever approvals we are following in our organization, based on that the purchase order will go to different level of approval hierarchies. Once got completely it got approved, then only it is eligible to receive the material. Okay. See, for let's assume purchase order also got approved and we send this purchase order to supplier. So once supplier receive this purchase order, what they will do? They will send the material, means whatever material we requested, they will send those material to our organization. So that means we are going to receive the material, means we are going to create receipts or GRN, also called as GRN. We will see that one. Okay. So what they will do, once purchase department will create the purchase order and they will send it to supplier. Supplier will send the goods to organization. So once this next immediately inventory department people who is responsible to receive the goods, they will receive the goods in our inventory organization. So now we are having sufficient material in our organization, so we can immediately ship the material to customer. Okay, that is we will discuss in order management part. Now we will see P2P cycle. So once we receive the material, what we have to do? We have to pay the suppliers. Why? Because we receive the material. For that material, we have to pay them. So what we have to do? Create invoice against to this purchase order. So who will take care of this part? Payables team. Payables team, once we receive the material, immediately information will pass to payable departments, and the payable departments, they will create the invoice against to purchase order or against to receipts. So once we create this invoice, what we have to do? We have to pay the amount, means payments done. We have to complete the payments. So next we have to do bank reconciliation. Bank reconciliation. See, once payable departments will create, after creating the invoice and pay the and then the payments, immediately information will pass to the cash departments. They are the responsible to reconcile all the information, whatever payment we have done, means complete that batch of payments, each and everything they will reconcile. Finally, all the accounts entries will pass to GL, general ledger. Generally, why we will use this general ledger? In simple term, to create financial ledgers only. We will see one second. General ledger. So this is the basic P2P standard. Almost each and every organization will follow this standard P2P cycle. See, in between, while before receiving the receipt, we can get the one more concept, ASN, and we are having iSuppliers, sourcing modules. We will see all those advanced topics. Later we will cover. Later we will discuss. At this point of time, we will discuss core purchasing module. Okay. 1 second. So, sorry. this is the complete P2P or procure to pay cycle. Okay. Now, okay. So this is the complete P2P cycle, what we are going to discuss in coming classes. Yes, but please note each and every point. Why? Because anyway, I will share these videos, but see, generally you people will review once or twice these videos. So that's the reason. If you want to, as a quick reference, please take a note each and every point so that it's easy to read whenever if it's required. Okay. Okay. Let's see. See, just I will go through once again whatever we discussed as of now. Whenever we require the material, we will create. I mean, I am discussing this as organization perspective. Whenever we require a material, we will create requisition. This requisition will contains what are the items we are going to buy and what is the, how much quantity and when we require those materials. So once this requisition got approved, suppose if we not yet finalize the supplier from which we are going to buy, then immediately what we will do, purchasing department, they will create a RFQ. RFQ means request for quotations. It requires all our requirement like what is the item, what is the quantity and when we require. And this RFQ will send to different vendors. See in our example, vendor 1, vendor 2, vendor 3. Against these RFQs, we will receive quotation from each supplier, quotation 1, quotation 2, quotation 3. See, once we receive the quotations, in purchasing people, they will do quote analysis. Means they will review all the quotations and they will choose one best quotation which is suitable for our organization requirement. So once we do the quote analysis and we finalize the supplier from whom we are going to buy, then purchasing department, they will create the purchase order. And once this purchase order got completely approved, we will send this purchase order to supplier. So against the purchase order, we will receive the material into our organization. Who is responsible for that one? Inventory people's responsible for that one. Once we receive the material, we will create a means payable departments. They will create a invoices against the purchase order and they will do the payments. And immediately data will pass to cash department. They will do bank reconciliation. Means see why this bank reconciliation, why this reconciliation can raise. See, we can pay different. Sorry. So once we do the reconciliation, all the entries, I mean, whether it's a debit or credit, those details, what are the accounting entries will impact under this P2P cycle, we will see later. So all those entries we will transfer to general ledger. So this is the basic beast of P2P. So what we will do? See, in our case, inventory peoples, they will create the requisition. No, see, but remember one thing. Always no need to create requisition only from inventory peoples. Depends on situation. We will see those things. What is the source for requisition? We will see. Maybe sometimes it will come from order management, or sometimes it will come from inventory module, or sometimes it will come from requisition will create automatically from BIP, or directly purchasing department they will create requisition manually. We will see all those. We will see all those details in depth later classes. So as of now, assume material shortage is available. So inventory department peoples they created requisition. So once requisition got approved, purchasing peoples they are responsible to create RFQ, and this RFQ they will send to different vendors, and against to that we will receive quotations, and based on that purchase order department they will do quote analysis. Once quote analysis is over, after finalizing the supplier, they are the responsible to create purchase order, and once we create purchase order got approved, we will receive the material again here. See by okay, as of now just consider receiving material is activity done from inventory department. Even we can do from purchasing also. As of now just let's assume we are doing only from inventory. We will see later that one. So once we purchase inventory department, is responsible to create the receipts. Once we receive the material, payables department, they will create the AP invoice and they will do the payments, and cash department they will do the reconciliation. So this is the complete P2P cycle. And in this one, in this P2P cycle, what are the modules it's involved? Let's see what are the modules. See, requisitions, Oracle purchasing, so that means Oracle purchasing, and RFQs also we will create in Oracle purchasing. Quotations also we will create in Oracle purchasing. Quote analysis also will done in Oracle purchasing. Purchase orders also in Oracle purchasing. Receiving we can do in Oracle purchasing or Oracle inventory. So Oracle inventory. Oracle inventory. Let's search. Okay, Oracle inventory, and invoice creation and payments as done in Oracle payables, and reconciliation will be done in Oracle cash management. Oracle cash management. And this one is finally we have to transfer all the accounting entries to general ledger. That means Oracle general ledger. Sorry, general ledger. So what are the modules we involved? Oracle purchasing. Oracle purchasing is for we will create requisitions in Oracle purchasing. RFQs also in Oracle purchasing. Quotations also in Oracle purchasing. Quote analysis in Oracle purchasing. We will create purchase orders in Oracle purchasing, and receiving the goods, receiving the material, we will do in Oracle purchasing or in Oracle inventory. And once we receive the material, we have to pay. So for that, we have to create invoice and we have to do payments. All these two activities is done in Oracle payable module. And bank reconciliation, this reconciliation part is done in Oracle cash management. Finally, all the entries we will transfer to Oracle general ledger. We will see this. After completing this complete cycle, at the end of the class, we will see what are the accounts will get impact in P2P cycle. This is the complete P2P flow. Okay. Where it will start P2P flow? We will create the requisitions. Okay, let's see here once again. We will create the requisitions. If we don't know the supplier, we will create the request for quotation. and we will send this request for quotation to different vendors. From the vendors, we will receive quotations. From each vendor, we will receive quotations, and immediately we will do quote analysis, and we will choose one best supplier based on our requirement, and against to supplier we will get purchase order, and we will receive the materials. Once we will receive the material, we will create invoice, and we will do the payments, and then immediately we will do bank reconciliation, and at the finally sorry, we will transfer all the accounting entries into GL. This is the basic P2P. See, here one more thing you have to consider. See, you no need to follow all these steps like requisitions, RFQs, quotations, quote analysis. See, when we will do this, or we will follow this cycle means if we don't know the supplier, then only we will go. Suppose if we know the supplier, that means we already know from which supplier we are going to buy. Then immediately, directly we will create the requisition. From requisition, directly we will create the purchase order. No need to create RFQs, quotations, and no need to do quote analysis. Why? Because we already know the supplier from whom we are going to buy. In that case, directly uh, we will create a purchase order from requisitions. So in that case, what the cycle look like is requisitions. We will create the requisition. Directly, we will create the purchase order, and we will receive the goods, and we will create the AP invoice, and we will do the payments and reconciliation, and finally transfer to GL. So that is if we already know the supplier from whom we are going to buy. Okay. Okay. Fine. Okay. Now we will see. So this is the basic standard P2P cycle. Now we will see in depth what is each, and we will go theoretical part of what is equation and what are the types. We will see all those things now. Okay. Okay. Generally, if you consider these requisitions, before that one, let me go through a few slides. Here already I prepared few slides. Anyway, this is same. Whenever we are having any demand, we will create purchase requisition. Based on that, we will create RFQ, and we will send this RFQ to supplier, and from supplier we receive quotes. We will do quote analysis, and against to best quote we will create purchase order, and we will receive the material, and finally we will pay the payments. This is the basic flow of P2P. And coming to requisition sources, I already told, right, these requisitions not always inventory department people only create. Sometimes automatically it will create from different modules, like this requisition automatically will create from OM module or inventory module, or it will come from shop floor, I mean working process, or purchasing department directly they will create manually requisition whenever they require. See, for example, consider scenario, suppose 10 new employees join in our organizations, so we have to provide them laptop. So for that, directly purchasing department, we know from already we know the supplier from whom we are going to buy all the laptops. Directly purchase order people, they will create the requisitions, and directly from requisition they will create purchase order, and they receive the material. So same thing here in this slide I am presenting. What are the sources for requisition? I means what is the demand sources. See, from inventory also we can create requisition, working process, advanced supply chain planning, from order management, or we can import the requisitions from third-party systems we are using. So how many ways we can create? We can create manually, or we can create manually this requisition, or we can import from these sources also we can import. Once this import, once we will create, it has to go to approval. We will see what is this internal sales or all these things we will see later. Okay, this is just to representing only. This is receiving process and invoicing, and this is the main slide I want to discuss. What are the modules integrated with PO? See, here I presented in pictorial way what are the modules directly this purchase PO module will interact directly. Inventory, VIP, OM, AP, GL, MRP, ASCP, advanced pricing projects. Uh, it will interlink with all these modules. We will see how it will interlink and how data will flow between all these modules. We will see in coming classes. Okay. Okay. Now coming to our P2P cycle. Okay. In P2P cycle, first one is requisitions, right? As of now, we know. Okay. These requisitions are two types. One is purchase requisition. Second one is internal requisition. Purchasing requisition. See, when we will create this purchasing requisition and when we will create internal requisition, that means whenever whenever we are going to buy any goods or services from third party supplier, that means third party means vendor or supplier. Whenever we are procuring, we are buying goods or services from supplier or vendor, then we will create purchase requisition. And when we will create this internal requisition is, suppose I required I received one sales order and we have to ship the material. See, for example, I am having two organizations in different locations. Okay. For example, we are having organization in Hyderabad and one is in Bangalore. Okay. See, now immediately we have to ship some material from Hyderabad organization, but in Hyderabad inventory we are not having sufficient on-hand quantity. So what we will do generally, we have to create purchase requisition, means we have to buy the material from third-party vendor. So here let's assume quantity is 0, but in Bangalore organization we are having quantity sufficient on-hand quantity. So here what we can do is, instead of buying from third party, we can transfer the material from other organization to from one organization to another organization. In this case, we can transfer the material from Bangalore to Hyderabad. So in that case, we will go for internal requisition. Internal requisition, when we will use is, it is used to request goods from internal source, like other organization means inventory. So if we are requesting the goods from our internal sources like other organization, then we will create internal requisition. So these are the two main types we are having. Requisitions, again we are having two types. One is purchasing requisition and another one is internal requisition. If we are going to buy goods or services from third party supplier or vendor, then we will create purchase requisition. Suppose if we are requesting goods or services from internal sources like from other organizations, from other inventory organizations, then we will create internal requisitions. We will see all these details in depth. Just now I am trying to introduce all the terminologies and what are the types available, all those things. Just if you are familiar with this P2P cycle and what are the technologies and what are the types of requisition, types of purchase order, then it's very easy to learn. So that's the reason, just from coming next class also we will completely focus on theoretical part only. Just first be thorough with all these terminologies. Okay, next in RFQ. RFQ means request quotation. Once we create the requisition, what we have to do? We will create the request for quotation, RFQ. Request for quotation. Again, here request for quotation having three types of RFQs. One is standard catalog and bid. These are the three types of RFQs we are having. What is the main purpose of RFQ? It is used to sending the requirements to the different supplier. That means this RFQ documents will contain all our requirement, means what are the material we required and how much quantity and when we require. So all this information we will send to the different suppliers. These RFQ documents three types. One is standard, one is catalog, and one is bid. So when we are going to use, now we will see when we are going to use standard and when we are going to use catalog and bid. See, generally this standard RFQ, standard type of RFQ we will go is, it is used for non-regularly purchased items. Means, see, suppose if you take any organization, they will provide all these stationery items like books, pen, pencil, each and everything stationery items we are having. Those stationery items generally any organization will buy from regular intervals. So if we are buying a material, if we are going to purchase non-regular items, then we will use for standard RFQ. When we will use for standard RFQ, if we are going to buy non-regularly purchased item, non-regularly purchased items. See, if we use standard RFQ, we don't get any discounts from we don't get any discounts from our supplier. Here discounts are available. For standard RFQ, we will get some discounts based on our discussions with the supplier and based on our policies. We will get some discounts. That means price breaks. Price breaks is nothing but a discounts. Price breaks. So price breaks is available for standard RFQ. That means we can ask them some discount. Suppose if I buy 100 quantity, how much discount you will provide? Or if I buy some 1000 quantity, how much discount you are going to offer? Those details we can negotiate with our supplier. So if we are going to, based on our requirement, we will use standard. Suppose if we are going to buy a non-regularly purchased items, then we will go for standard RFQ. And here price breaks is nothing but a discounts. Discounts are available discounts are applicable for standard RFQ. Okay, what is catalog? Generally, it is used for bulk quantity, means to buy a bulk or large volume of regularly purchased items. Then we will go for catalog RFQ. So just now we discussed about stationery items. Stationery items regularly we purchase from suppliers. So if any item we are going to purchase on regular basis and large volume of data, large volume of quantity, then we will go for catalog RFQ, means regularly purchase and large volume. And here also price breaks are available. That means we can discuss and we can negotiate with suppliers, and we will get some discounts based on our discussion. We will get the discounts and based on how much quantity are that one purely depends on our negotiation, how much discounts we are going to get. So catalog requisition is used for regularly purchased items and if you are going to buy a large volume of data. And coming to bid RFQ. See, generally bid RFQ when we will go is it is generally used for to specify fixed quantity and fixed date, fixed location type of items. See, generally, see for example, if we take any special items like machineries or vehicles, so those things we have to deliver some fixed location and on fixed date we have to deliver. Those generally we will go for if one buy any machineries or vehicles, those type of things we will go for bids, the bid RFQ. So here no price breaks are available. So that means if you buy any number of quantity, we didn't get any discounts. Okay. See, RFQs are three types. One is standard, one is catalog, and bid. Standard RFQ we will use for non-regularly purchased items, and here discounts are available. Catalog RFQ is used for regularly purchased and a large volume of items, and here also discounts are available. Bid RFQ is generally used for specific quantity and fixed time, fixed location, and generally if you want to buy any machinery or vehicles, then we will go for bid RFQ, and here there is no price breaks applicable for bid. Okay. Okay. Next one is quotation. So based on our requirement, we will create RFQs and we will send this RFQ to different suppliers. Once we will send this RFQ to suppliers, we will receive quotations from each supplier. Again, these quotations also same type, having three types: standard, catalog, and bid. See, suppose if we send standard RFQ, we will receive standard quotation. If we send catalog RFQ to supplier, we will receive catalog quotation. For bid RFQ, bid quotation. So yeah, simple as like that. So here also quotations we will receive different. We will receive from each and every supplier, and quotations having three types: standard, catalog, and quotations. So next is quote analysis. Anyway, quote analysis. See, generally why we use quote analysis? Quote analysis is used to analyze who is the best supplier is suitable for our requirement. Based on our requirement, we will choose one best quotation, means best supplier. Next one is purchase orders. See, once we finalize the quotation, means supplier, we will create the purchase order. See, again here we are having four types of purchase order: standard purchase order, planned purchase order, blanket purchase agreement, it's also called as a BPA, and contract purchase agreement, CPA. So again, these purchase orders are having four types: standard purchase orders, planned purchase orders, blanket purchase agreement, and contract purchase agreement. So what is standard purchase order? It is one-time purchase of various items. Generally, when we will use this is suppose for generally we will choose for a standard purchase order for a non-regularly purchased items. Suppose immediately I require some material which is not regularly I will purchase. So in that case we will go for standard purchase order, which is generally for one-time purchasing and non-regular items. That time we will go for standard purchase order. And planned purchase order. Next one is planned purchase order. See, generally planned means it is uh, 1 second, please. Okay, sorry. See, standard purchase means suppose if we are having any one-time purchase of non-regular item, non-regularly used items means non-regularly purchased items, then we will go for standard purchase order. Planned purchase order means suppose it is a it's just like a agreement with suppliers means long-term agreement means coming we are having 1 year agreement with supplier and coming days we are going to buy this type of particular item I am going to buy on next month or something like that. It's a there here we will specify what is the quantity and here we will mention what are the terms and conditions and what is the agreed amount and what is the while actually buying the material and how much minimum amount how much we are going to buy, all these details will be available in planned purchase orders. It's just nothing but a agreement, a long term agreement with supplier with supplier. And blanket purchase agreement, this is also same as a uh, planned purchase order. I mean, it's also an agreement between supplier. And why we will use this blanket purchase order is it is used to purchase goods or services. Here, generally, we will know what are the items we are going to buy, but we don't know the how much quantity and when we require that one. We don't know all those details. But in planned purchase order, we know how much quantity we are going to buy and what is the item. But in blanket purchase agreement, it's also a agreement between supplier and organization. Here we will know only the material, what are the material I am going to buy. But I don't know. But at the time of agreement, we don't know how much quantity we required and what are the and what dates we required. Those details we don't know. It is a long-term agreement with supplier to buy goods and services with specific time period. Here we are having price break, means discounts are applicable for blanket purchase order. See, generally once we will agree, we are having any agreement with BPA. Suppose I am having a BPA agreement for a blanket purchase agreement with supplier for 10,000 for item, for example, item 1. We are having agreement. See, then suppose now organization require material, how they will see, generally what will happen in standard purchase order, once we will create the purchase order and we will send to the supplier against the standard purchase order, we will receive the material. But in terms of this blanket purchase agreement, here it is not a general, not like standard purchase. It's an agreement, long-term agreement. Suppose agreement amount is 10,000, and for item 1. See, whenever we require, what we will do is we will create releases. That means suppose now we require 10 quantity, and within we require that item on 9th February. So how we will by using releases, we will procure the items from suppliers. We will see those things. How we will in depth we will discuss all these four purchase orders. So by using blanket releases, whenever we require any material, we will create blanket releases. Okay. Again, this blanket purchase agreement are having again two types. One is local and one is global. That means local BPA is applicable only for specific operating units. That means if you create any BPA against only particular operating unit, it is applicable only for that particular operating unit. Suppose if we create global BPA, it is applicable for multiple OUs, means we can procure across multiple BUs. We will see those details in depth later. We will see. Here, contract purchase agreement. It is also an agreement between supplier and organizations. But here in contract, we don't know anything, just only terms and conditions, except that in this agreement we didn't mention anything, means what are the items we are going to buy and what is the quantity and what when we don't mention anything, just only terms and conditions. That's all. See, if you take blanket purchase agreement, here we'll if you take planned purchase orders, this is also an agreement between suppliers, but here we know what is the item and what is the quantity. I mean fixed quantity, how much quantity we are going to buy, and what is the planned schedule date also we can came to know. But in blanket purchase agreement, we are having agreement between organization and supplier only for particular item. That means we know only material. This item I am going to buy within this 1 year time frame, but we don't know how much quantity we are going to buy and when we are going to buy. We don't know those details, and even price also. That means only what are the items we are going to buy and terms and conditions only we will mention in blanket purchase agreement. Contract purchase agreement, and this one also agreement means agreement between organization and supplier. Here we will having only terms and conditions. We didn't mention this agreement, not having anything, means what are the items and how much quantity when we require, all those details we didn't mention anything here. That is called contract purchase agreement. So we will see in depth how we will going to use all these things. Just but briefly I will explain. Standard purchase orders we will use for generally for non-regularly purchased items. Once we will create standard purchase order, immediately we can receive the material. Planned purchase orders, it is also it's a contract between organization and supplier. Whenever we require a material, we will create plan by using releases. We will procure the material. Blanket purchase agreement, this one also this one agreement between organization and supplier. In this agreement we will mention only what is the agreement amount and what are the items we are going to buy, but we didn't mention how much quantity we are going to buy. So whenever we require material, we will create blanket releases and we will send those releases to suppliers, and against that blanket release we will receive the material. And coming to contract purchase agreement, it's also an agreement between organization and supplier. But here in this agreement we will mention only terms and conditions. Terms and conditions means maybe from which courier you are going to say, how many days it will take, who is the, suppose while sending the material, if damage happens, who will responsible, maybe something like that. Terms and conditions every company having, right? Those terms and conditions only we will mention here, and just we will mention and what is the agreement amount and what is the, maybe we can mention time frame, or if we are not having any time frame we can leave it. No, not at all. Contract purchase agreement will contains only terms and conditions. We didn't specify any. That means we can against to contract. See, if we take blanket purchase agreement, we are having agreement with amount 10,000 for only this item. That means against this BPA we can't buy item 2, some other items. Always we have to buy item 1 only. But if you take contract purchase agreement, Here this agreement having only terms and conditions. That means we can buy any type of item or any quantity, any scheduled date. Here there is no restrictions. Only restriction is what is the contract agreement amount. That's all. So how we will use this one? Whenever we require, we will create a standard purchase order against to this contract purchase agreement, and we will send the standard purchase order to supplier, and then immediately we will receive the materials from whatever required material from supplier. That is the standard contract purchase agreement. Okay. So these two, how we will use? By using releases. Whenever we require material, we will use release. What are the releases? Again, these are two types: schedule release and blanket release. Blanket release. Schedule release we will use for planned purchase order, and blanket release we will use for blanket purchase agreement, BPA. We will see all those details in depth. Okay. Okay. Next. Receiving. See, generally, once we send this one to means purchase order to suppliers, what will happen? We will suppliers will send the materials, and we will receive this material into our organization. Again, while receiving, we are having three types of. We will use generally three types of receipt routines. Direct. One second. Direct, standard, inspection required. Direct means it is a single step process to receive and deliver the items. That means whenever we got the material into in our organization, directly we will receive that material and we will transfer that material to directly for destination. Here destination means our organization, inventory location where we will store our all the material. Directly we will store, we will deliver to the destination. It is only single step process. So only single step. Single step means directly we will send this material to destination. Destination here, destination is a sub inventory. Directly we will send the destination. Standard. It is a two-step process. What here we will do is, it is a two-step process. First we will receive the material, and then we will deliver the items to organization or sub inventory. That means first whenever material coming to in our organizations, see, generally if you take any stores or any shopping malls, it means anything, directly these materials they can't deliver it directly to destination. First they will dump into some area. From there they will move the material to destination, means sub inventories. That is called as a receiving area. That means first in standard, if we are using standard method, first we will receive the material into our receiving area. Then from receiving area, we will transfer the material to our inventory organization. That is called a standard. Suppose if we are using the inspection, it is a three-step process. First, we will receive the material. See here, directly receive and deliver. In direct here, receive and then deliver. Here first we will receive, inspect and then deliver. Inspection required is a three-step process. What we will do is, here first we will receive the material and we will do the inspection. Suppose if we found, suppose for example, we raised a purchase order for 100 quantity. So we received 100 quantity, and while doing inspection, we found out 10 quantities damaged. So that means only 90 quantities are good. So we will transfer only these 90 quantities to our destination. This is a three-step process: receive, inspect, and then deliver. So again, this receiving is a receipt routings are having three types. One is direct, standard, inspection required. Direct is a single step. Immediately we will receive the material and we will deliver to our destination. In standard routing, it is a two-step process. First, we will receive the material into our receiving area, and then from there we will deliver the material to destination. In inspection required, it is a three-step process. First, we will receive the material and we will do the inspection, and then finally we will deliver the material to organization, I mean destination. This is a three-step process. Okay. What is next step? Once we receive, we have to create invoice. See, again we are having different types of invoice: standard, debit memo, credit memo, credit memo invoice, and recurring invoice, and so on. So we no need to discuss all those details, but we will discuss standard, debit memo, and credit memo. These three things we will discuss. Why? Because the credit memo, debit memo. See, for standard invoice, generally we will create for once we receive the material, we will create standard invoice against to purchase order. But this, suppose once after receiving we found out few items are damaged. So what we will do immediately, we will return the material to the supplier. So for that one we have to get money, right? That time we will use this debit memo, credit memo. We will see how to use that one in that case. Okay, we in our course we are going to discuss standard, debit memo, and credit memo. These three types of invoice we are going to discuss. Okay. Next one is payments. So once we create the invoice, we will pay the amount to the supplier based on invoice. And one more is there, prepayments. Means in advance we will pay prepayments. This one also we are going to see. Prepayment also we will see. Next, reconciliation. Generally, it is used to perform cash clearance between parties. Here, parties means suppliers, supplier or buying organization or third party like banks. This bank reconciliation. And finally, whatever account entries hit in this P2P process, we will transfer to GL. This is the basic P2P flow. Okay. Any clarifications? I mean, any doubts on this one? Okay. This is the complete discussion about P2P cycle. Anyway, briefly once I will go through complete cycle. Whenever we require any material, we will create a requisition. Requisitions. Again, these requisitions are two types. One is purchase requisition and another one is internal requisition. If we are going to buy any material from the suppliers or vendor, then we will create purchase orders, purchase requisitions. Suppose if we are procuring, means we are requesting material to transfer from from one organization to another organization, then we will go for internal requisition. So once we will create the requisitions, we will create RFQ. So this process we will follow. Suppose if we don't know the, if we not yet finalize the suppliers. Uh, Once this requisition got approved, we will create RFQs, means request for quotations. Again, this request for quotation is three types: standard, catalog, and bid. Standard is used for non-regularly purchased items, and it is standard RFQ is used for discounts. Catalog RFQ is used for regularly purchased items with large volume of quantities, and here also discounts are available. And bid generally will go for fixed quantity, fixed location, or fixed dates. Generally, for example, machineries, all this stuff, or vehicles. Those things we will go for bid. Here, price breaks are not available. Once we will create the RFQ, request for quotation, we will send this RFQ to different vendors. Vendor 1, 2, 3. So from each vendor, we will receive quotations. See, in our example, quotation 1, quotation 2, quotation 3. See, here RFQs are three types we discussed, right? Standard, B, standard, catalog, and bid. Suppose if we created standard RFQ, then we will receive standard quote, and for bid RFQ, we will receive bid. For catalog RFQ, we will receive catalog quote. Depends on our which type of RFQ we created, same type of quotation we will receive. Okay, once after receiving the quotes from each supplier, what we will do is we will do quote analysis. That means here we will verify all these quotes, and based on our company requirement, we will choose one best quotation. Means best quotation means we will here on after doing quote analysis, we will finalize the vendor. Once we will finalize the vendor, we will create the purchase order. Again, these purchase orders are four types: standard, planned, blanket, and contract. Generally, when we will go for standard, when standard we will go for standard purchase. Generally, if we are going for one-time purchase of non-regularly purchased items. Planned purchase means it's an agreement between organization and supplier. Here we will specify what are, suppose coming 1 year, suppose agreement is 1 year, what are the items we are going to buy, and what is the quantity, and what are the delivery dates, means on what dates we require these items. All those details we can mention in planned purchase order. Planned purchase orders. In blanket purchase agreement, this is also a agreement, but in this agreement we will mention only agreement amount and what is the item we are going to pay. But we didn't mention uh, how much quantity we are going to buy and what the when we require. We didn't mention anything these details. In contract purchase agreement, it will contains only terms and conditions between organization and supplier. Here we didn't mention anything. Means what are the items we are going to buy? We didn't mention anything. Whenever you require a material against a planned purchase order, we will create scheduled releases. And for when if we are using blanket purchase agreement, whenever we require a material, we will create blanket releases. And suppose we are having a contract purchase agreement with supplier, then whenever we require material, we will create a standard purchase order, and again a standard purchase order, we will receive material. So purchase order four types: standard, planned, blanket, and contract purchase agreement. Okay, once we create the purchase orders, that means for example, let's say it's already approved. Once purchase order got approved, we will send this approved purchase document to the suppliers. Against that purchase order, so what supplier will do? They will send the material. That means we will receive the goods into our organization. Again, while receiving the goods, we are having three types of receipt routings: direct, standard, inspect. Direct is a single step process. Directly we will receive the goods and deliver the material to destination location. In standard, it is a two-step process. First, we will receive the material to our receiving area, and then from receiving area, we will deliver the material to the destination supplementary. Inspection required is a three-step process. Here, first we will receive the material into receiving area, and we will inspect the material, and finally we will deliver the material to our destination location. It is a three-step process. Okay, once we receive the material, what we will do? We will create the AP invoice, and again we will create AP invoice against to purchase order or against to whatever goods we received. I mean, how much quantity we received. Once we create the invoice, we will pay the we will do the payments against to those invoice, and finally we will do the reconciliation. As a final step, what are the account entries happened in this P2P cycle? Every account, all those accounts we have to transfer to general ledger. And again, here we already discussed, right? Invoice are few types of invoice we are having: standard, debit memo, credit memo, prepayment, recurring invoice, or expense invoice, and so on. We will see in depth. We will see mainly these four types of invoice. We will see as part of this course. But as part of this SCM course means purchasing, we will see all these types: purchasing, requisition, standard, bid, catalog, standard, planned, blanket agreement, contract agreement, and what are the releases, and what are the receiving options available. Each and every option we will see in depth in coming classes. Okay. See, finally, what are the modules involved here in this P2P? Variable purchasing or inventory, variable payables, variable cash management, and variable general ledger. So these are the modules involved here. We will see all these things in depth. Each and every step we will discuss in coming classes. Okay. Okay, fine. Then it's fine. Please let me know if you are having any questions, or maybe anytime you can. You are having my number, right? Even Gmail ID, or you can drop me an email about your questions, whatever you have. Immediately, whenever having time, I will verify and I will reply to that your questions. Okay. Okay then. Fine. Thank you. Tomorrow we'll meet. Okay. Bye.